Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. Let's see what we got going on today. It's just mixed all over the place. We saw the euro closing that weekly sell. We've got, I left up on the, you can see it on J4X. There's the Swiss franc against the dollar, or the dollar against the Swiss franc. And up on the Chicago Quant right now, I just left that up there for a second just to show you the ETF, the dollar index ETF. You can see it here. It's moving up nicely, or I guess they're just moving up. Just the math says move up. It's moving up. That's why I refer to it as nicely. In other words, if it was going down and it was, and the math said it's going down, then it's moving nicely. when it's going up and the math is saying it's going down, that's not moving nicely. But anyway, that's where we're at there. So I left that up there for a few seconds just for you to see that. And at the same time, obviously, when we look at it on the Chicago Quant through the dollar Swiss there, you see not as excited, but it's still a second day in daily buy here. So it's let's put a line in there from Friday. So it's it's lifting up. You can see here. You can see the weeklies just on the edge. Trying to fight its way of not moving into that weekly buy. So we'll keep an eye on that throughout the week. Let's jump over to the chat line and make sure, let's see what's okay, there it is. Let's find the chat line and see what's going on there. See if everybody's as half awake as I am. I did a lot of farming over the weekend. And then I did some politics over the weekend. So I farmed on Saturday and Sunday. I was working, making the plants happy and cultivating, and then there was the new governor, or the fellow who's running for governor in the state of New Jersey. Went to a little fundraiser there, and to meet up with him, and so that was entertaining too. And so kind of exhausted. Then I went out to dinner with friends, and that's where I got in trouble. Drinking a little of the grape, a little aggressive towards the grape. That's exactly it. So, let's see what we got there. Okay, I'm looking at some of the messages from Robin. We got someone that's actually going to go after the live setup, which is fascinating. I always am impressed with that. It's like the keys to the Ferrari. Maybe it's Lamborghini. It's kind of like the Robo, one of those type of things. All right, let's jump over to the euro and take a look at that. And let me check the chat line too. Let's see if anything's going on there. Nope. Butkus. But let me just double check and make sure the sound is good too. Oh yeah, sounds fine. Excellent. All right. Let's start off with the euro, or go after the euro now. Right there. As you can see through the Chicago Quant. We didn't put that line in there because it's only on the one I sent out. Okay, there it is. And went into that weekly sell on Friday. Confirmed it on Friday. It was underneath there, I think, most of the week, as we talked about. There we go. Make it pinkish and solid line-ish. And let's just make it like that. There we are. You can see that. We went into the weekly sell. And today's not really going anywhere. Actually, it's just a little bit firmer, I think. And let's just take a look at it through J4X. Right there. There we go. So you can see that 121.19, not the worst thing. You can see the hinky actually makes it look like it's sinking much further, whereas in the actual, it's just a red dot and pretty much unchanged. And that is the action we're starting to see there. The dollar's being bought. I mean, there's a lot of confusion about what to do about inflation. There's a very comfortable level of money managers that think they think it's hunky dory. Think it's okay to just just walk away. I mean, it's literally that. I mean, that's exactly what it is. They actually think like, oh, don't worry about it. This is transitory. This is nothing to worry about. Don't look behind the curtain. There are some out there who, actually follow fundamentals, and they're really nervous about this. And and they don't know they don't know how to not be nervous about it. So we're going to be, this is going to be very interesting to see how this particular event, I guess you could call it, the inflation numbers. Some of them saying, look, the economy, like I think it's PPI came out today, right? I think it's today. PPI comes out, and you have CPI and PPI, and you have GDP, and they're all. The world has been closed down, and now it's getting opened up, and it's like, okay, and so the numbers are really exploding, and a lot of money managers are trying to say, well, this is not really that serious right now. Don't worry about it. It's going to go away. It's only going to happen for a month. So what'll happen is we could see ourselves, we could see ourselves staring at these numbers and more people getting nervous. But just a good example of it is when you go and look at the, say, the Dow Jones Industrial Average. Let me go over that, and I'll show you what I mean. You've got the old line companies and the. See if we can find that thing. Where is that? Where's the Dow Jones? That's not it right there. It's right there. There it is. Okay. And so right there, you can see it went into a weekly sell last week, and it's down right now. Not a lot, 20 points, 30 points, something like that. But money is starting to move out of the best index of all. This index has the Dow Jones Industrial Average, which has a flavor of the NASDAQ 100 or the Tech 100, and it has all the top companies in the United States in there. It's moving down. That's what it really comes down to. It's moving down, and they're a little concerned now. Normally, stocks are something that you would kind of own for inflation for a short period of time, and then, or they usually sell them down and then buy them when they're cheaper, because the inflation usually, in other words, a company can raise its prices with inflation. So that means earnings are going to stay steady or increase. And so that's usually the recipe to that. And so, we go over to the S&P 500, and you can see that's just right on the edge. You can see it went into a weekly sell last week right here. Where's that at? And right there, you can see that went into the weekly sell like the Dow Jones Industrial Average, but it's flirting with the weekly buy already. It's trying to do that. And then, last but not least, the other index, the third one, the NASDAQ 100, which is still the June contract being traded, where the other two are trading in the September contract. That's firm by 35 points or something like that, and it went into a weekly buy last week, not a weekly sell. So that's the flavor that we are seeing here. And at the same time, you want to go to talk about insanity. Here's the 30-year bond. The 30-year bond, when it goes up in price, interest rates are dropping. They're going down. Okay, so it has an inverse relationship there. And so when you see a bond go up in value, the cost of the bond itself to buy it, instead of, a bond is basically priced at 100. And then what happens as interest rates drop, they move it up to like 101 and 102 and so forth. In this case here now, the product is trading at 160. Okay? So it's basically 1.60, not 1.06. That's pretty hefty. No, it's heading up in price, and the yield is heading down. We've seen the yield where it yields 1.59 or 1.57 depending on the day you were paying attention to it, as a high about 3 or 4 weeks ago. Now we are looking at it trading in the yield of about 1.47. So it's dropped 12 pips, or basis points. And so that's what we're going through right now. That's the the oddity to the action. So fundamentals terrifying some people. Fundamentals to others laughing it off, thinking it's just a brush fire and the winds are not going to kick up and burn down the city. Welcome to my neighborhood. All right. So now let's jump over to, let's see, we go back to the currencies here. But I thought I'd just show you, because we're seeing the currencies show weakness against the dollar. And that's what that's all about. And then we go take a look at cable, the British pound against the dollar. There, it's trying to bend into the below the zero line. You can see I'll put it up there like that. You can see plot 1 is 0.00017. So it's still plus by a hair. It's still fighting to stay up. The daily went into the daily sell there on Friday, as you see right there. Let's put that little red line in there too. Hello, red line. Where are you? There we are. So it went into a daily sell on Friday. And it's, again, just like the euro, pretty much unchanged. Just a little pressure, a little red dot going on, and you go over to J4X. I'm sure we're going to see the same thing. It could be green. It could be green. No, it's probably red because Friday was red on our Chicago quant, so more than likely it is red by now. It has to be by this point. There we are. And here it comes. Yep, see that? And it's red. It's been red for like 4 days on that. Whereas you can see we were volatility, nothing, green, and then red, red. So that's probably, this right here. The weekly is showing strength still. They're trying not to sell the product. And again, we've put these trapezoid or these big long rectangles up there, looking at the way the products are all going really sideways. They're not really, moving aggressive. They're going sideways. They don't know. Hey, 47, how you doing? Yeah, look at the cable there. Yeah, it's doing the same thing as the others, and it's just holding on by its, just by its, by a thin thread. You can see there on the weekly, on the, should put that up there again like that for you. There it is. You can see it there. It's, the weekly is still plus by 0.000013 now. I think it was 17 and now it's 11. You can see it's just moved from 13 to 11. It's trying to move down also. Now 13 again. See that on plot 1? And so that's where we are with this product. It's trying to fall down, whereas the others are falling down. The dollar is firmer, and because some just don't know what to do with it. I mean, inflation, no inflation, it's going to be, let's put it this way, the longer they don't know, the more violent in either direction it will go. And if we're in a weekly sell and a daily sell, that violence more than likely will be on the downside, and if vice versa. If we get back into weekly buys and daily buys, then we know it's going to be on the upside. 33, how you doing? Good morning to you, or afternoon or evening. We're having a fun-filled day here. If you want to see anything, just shout it out. We'll put it up there. I don't care if I've seen it twice already. We'll look at it a third time, as far as I'm concerned. Then let's see where we go from there. Now we jump over to the Turkish lira, which slid into weekly sells not only in look at that, not only in weekly on the dollar Turkish lira, but at the same time, let me get rid of that. At the same time, it now is flirting right back into the buy. So good for it. Talk about crazy times. There it is right there. So it slid in there. Now I'm going to take that, move that there, and change the color. Because now that's trying to get back into the buy again. And let's see where that will go like that. And make that green. So that was really short-lived. One whole... we went into a daily sell there for 3 or 4 days, and it's still in the daily sell, but now it's flirting with the buy. So that is the action there. Let's jump over to, let's see, the euro against the Turkish. Oh, let me save this. The euro against the Turkish lira. No, not that. Save it. Where am I saving it? There it is. Save workspace. And then save workspace as. There we go. All right, now we'll jump over to the euro. And right there it is. Same situation, same. Went into the, I think might have gone into the daily sell a day ahead of time. We can go back and double check. So this is the 5th day now on the daily sell, and at the same time it went into the weekly sell, and it's becoming very short-lived because here we are flirting with the weekly buy. already, right from the start. So it's very hard to be short at this point in the daily, solely because we got a weekly trying to turn up. So for you out there that have to trade that product, because you're an importer or exporter to Turkey, my answer to that is, basically just be flat now. And if you need it, then you know that there is short-term strength that could possibly start to jump out. And so you just wait for us to get a green dot in there. Let's see, what the 33 says, how about Bitcoin? Yes, let's take a look at Bitcoin. And let me just save this too at the same time and put the cute little circle in there while we're here. So this way, when someone says, hey, let's take a look at that, 10 minutes from now or 2 days from now, we have it in there. Let's see, that goes like that. No, cancel. All right, there we go. That goes like that, and that goes like that. And now we're going to zip over to Bitcoin. Let me just, and let me save that too. Save workspace. There we go. Okay, so here's Bitcoin. My son likes to trade the Bitcoin and the Dogecoin. They like that, both of them do, both sons, and they've been using Doc's math since they were little kids. I used to put them on my knee and so forth. Let's take a look at Bitcoin. I think it's really sloppy, but in a buy still. Yeah, it was in a buy, even with this going up. Went into the buy here. Let's give it a refresh. And it's hard to believe it's trying to get into a sell there. It's been in a weekly sell for like 9 or 10 weeks. There we go. And you can see we're actually flirting with the weekly buy right there. Let's just widen this. This is just a gas 3 instead of the gas line 3, so you don't get the lines crossing. Instead, what you're doing is you're watching the histogram touch the little blue dashed lines when it's on the plus side, as like the way the green line gets through the top of the manifold and then breaks down again. And that's how that works there. So I'm a little surprised how much weakness they're showing that there, but then we got a red and green, so it's still in the daily buy, even with all that red and green going on there. Let's see, JJ says, hey JJ, nice meeting you there. Doc, at least for a while, the Fed argument remains coherent. Yeah, I'll agree with that. Food inflation running at 2.2, and shelter cost also 2.2, and jobless claims, the last number is 37.5. Oh no, I hear you. And there's some that feel very comfortable with the idea that that this is going to be short-lived. They say 2 months. What'll happen is next month's numbers. Where are we at now? We're in July, right? Now we're in June. So the July numbers, if they don't start to show like a steady sideways move, and they start to show even more explosive, then they're going to start to get nervous. And then the August numbers, even with it being a dead month, if they don't see weakness coming into that at all, and there's still strength in it, in other words, it's higher than it was in July, then you're going to see that classic. If you've ever looked at some of the major tops in world markets throughout, like for the last century, say, the last 100 years, not the last 21 years or 22 years, but the last 100 years or so, a lot of sell-offs from high-flying markets come in the first week or two of August. And so that's you're right. What you're saying, what JJ is saying is totally right. At least for a while, the Fed argument remains coherent. They do. I agree. There are some, like in the Wall Street Journal last week, which were pushing, that the Fed needs to show that they're coherent to the fact. And I think they do show that. I really do. Now, would it be nice if they just calm down about adding so much liquidity to the bond market? Yeah, I guess it would. It would show that they're doing a anticipation of an anticipation. But I agree with JJ. They have a little wiggle room still before they have to actually become aggressive. I agree with you. There's just a little wiggle room there. Just a little, not a lot. But there is a little. and that's what they were hoping for. And then Jackson Hole is Jackson Hole in August? Is it? I guess it is. Jackson Hole happens to be where all the the money people, from the funds and the central banks and all like that get together and they talk, and the bankers, like Citibank and J.P. Morgan and all that stuff, and so that is when you start to really see the nervousness, is if they have not been satisfied. But I agree with JJ to a great extent. We still have some wiggle room. Let's put it that way. They still have some wiggle room. JJ says agricultural commodities retracting in June. Yes, I found that to be very curious too. I'm thinking it's delivery, but I'm going to show you. I can show you a really interesting example of that. Let me put that up there, because I've been thinking that I was hoping that somebody would bring it up. I'm glad JJ brought this up. JJ, stick around, will you? You're asking some really good questions here. JJ, agricultural commodities retracting in June. It is also a move in the direction of the Fed's argument. Right, exactly. And look at this. You should see this cascading event. That's a fancy word for like the way water runs down a stream, or it's cascading. It's all rolling over. Check this out. I'm going to open up the commodity page here, and I guess you could say, JJ, and the rest of you's out there, you could say that the currencies are really kind of quiet. They're not exactly explosive, and I guess that does explain those big rectangular boxes I've put around them. They're not really going anywhere. And that could be, what's this all about? See, it's okay. This needs to be moved over, like that. There we go, that's oats. Now let's look at this. I want to show you something, that cascading effect. Let me show you. I'm seeing it in bean oil. Check this out. Now here's soybean oil. Let's see, where's that? There's July bean oil, okay? And as you can see there, daily sell for days upon days. The weekly joined in. Let's move that over here like that. The weekly moved into a weekly sell. You can see here, that pressure. Now check out December beans. Bean oil. Look at December bean oil. Went into a sell on going on today, and it's starting to catch up to July bean oil. It couldn't break it into there on Friday, and now look at this. This week, it's flirting with the weekly sell. Okay, today, it's starting off that way. Now, check this out. Here is January bean oil. Now, another back month. We have some clients that follow this very closely. And so here you have, same situation, January now, making it into the weekly. Look how fast it dipped from last week all the way to today. Just from Friday to Monday. Look at that big dip right there. Can you see that? Oh, here we go. Look at that big dip right there, okay? And at the same time, the daily is refusing to go into the sell now. Okay, so the back months, they're cascading slowly. Let's give that a refresh. The whole thing. You can see it's slowly cascading. It's still in a a daily and a week daily buy still. Okay. You can see that there. All right, now let's move. Oh, and let's move that over like that. There. Whoa, pretty wild there, huh? There we go. And so then let's look at March bean oil. You can see the back months are starting. It's not a contango, but it's definitely a cascading characteristic going on here. This morning when we sent that out, it was showing some weakness there. They've actually taken the red dot out of there and moved things up to the point where I can actually remove that red line. And you can see here, the weekly is not breaking the zero line. It is still in the weekly buy, in March bean oil, which is obviously next year's beans. It's Well, it's November beans. Okay, so we're looking at November beans. Now, so JJ makes a really good point here about the cascading of characteristic. Whereas now, in some of the others, let's see, JJ just said something. Agriculture, thank you for your comments. I agree with you. Yeah, well, this is a cyber trading pit. When someone says something that has a lot of validity, all the traders look at it and go, "Yeah, look at that. That's right." And then if you say something that makes it's off course, traders will go, "Yeah, well, then I'm a buyer and you're a seller." That's just the way the game goes. That's the way I've been raised. Robin has been raised. We've been both in trading pits for over 40 years. So I think Robin says that combined together trading experience, we almost have 90 years of trading experience together. We've both been in trading pits over 40 years. Robin can say over 45 years. So, that is the fact of life, Then check out some of the meats, all right? Check this out. Or some of there's July corn. You can see July corn is just making it into, and this July corn has got a strange beta to it. So we use a gas line 3 and 5. So it's using a combination of 3 and 5, okay? And that's what the histogram is. The histogram is the 5. Or is it the 3? The green line. Let's just double check what that is. Yeah. So the histogram is the white. That's what that is. The histogram is the 5, and then the green line is the 3. And so you can see here this product. This is the July contract, and let's take a look at. We have 3 products there in July. In corn, I'm sorry. We also have December corn. Well, let's take a look at September corn. September corn, right there, and its characteristic. You see, September corn is the new crop. Not paying attention to it. See that? Now remember, in bean oil, we're really looking at when you get past November, you're looking at the November crop. In many ways, they're looking at old crop right now. In what we're seeing in July, and in let's see, was it July? Then we go right to what do we do? Go to December. So we're looking at old crop in July, and then we're looking at new crop. New crop December can be really sloppy. It can be a combination sometimes of the old crop and new crop, but definitely January and March are November beans, which is the new crop. So. Yeah, well, you know what, JJ? You're the one that brought it to the table. This is a cyber trading pit. I try to treat this webinar like we're all standing in a trading pit. And what you have is you might be talking to CRT, might be talking to just a simple floor broker. You might be talking to First Boston. You might be talking to Marks, my group, Marks Associates. In other words, you don't know the stories and the information in a trading pit sometimes is shared. Not all the time, but sometimes it's shared. And back in the old days, and you get to know, like CRT is the ones that created the crush spread, that the what do you call it, brothers, the Ritchie brothers. Okay, I traded with all of them. Hey, Alan, how you doing? Good morning. So, JJ, you brought some really good points of view. You are truly speaking clean, clear anticipations and actions of what we're seeing today. We're seeing enough information that the Fed has some wiggle room, and at the same time, enough paranoia by the Wall Street Journal and some money managers, not a lot of them. We're not really feeling it. We're seeing it in the Dow Jones. We're not seeing it in the NASDAQ. We're seeing it in bean oil, in the front months, and some of the mixed months, but we're not seeing it in the back months. Now this is September corn, and we're going to finish this train of thought unless someone asks another question about it. Here's the December corn. December corn is trying to break down. Now the December corn is new crop. And you can see here, the weekly, climbed right back into the weekly buy last week after 1 week in a weekly sell, right there. And now we're right back into it again. The weekly, I just realized that we don't have a line on that. Is that right? Oh, okay, that's right. That's the, yeah, there we go. So, it went into the weekly buy last week, and now what are we seeing? We're seeing weakness again in the weekly sell. So, JJ is right. They've got us still in that situation where the longs can be long and the shorts can be short and feel comfortable with their manifesto of their incorporation, their fund incorporation. Alan says liquidity is drying up just like the 2000 tech bubble. I was in Bankers Trust. Oh, we were neighbors. I just saw today a almost $2 billion AUD. Oh, an Aussie trade, really? Failed the strike rate. Wow. Now you were at Bankers Trust. I was at Ulysses then. And we were, was that 43rd, 44th in Manhattan, right? I forget where Bankers Trust. It was right around, it might have been in the same building, Bankers Trust. Oh no, you know what was in the same building was Bank of New York. Yeah. So, yeah, I remember. I remember I caught the tech bubble. That's when I did the famous, or I guess it's not too famous really, but I caught I put 30 some odd $1,000 into a back spread on Juniper. And at the time Juniper was trading at $217 a share, and put a back spread on in the puts, and did it for a credit, but the most we could lose was $30,000 in the spread. And the tech bubble hit like a week later, and the position went to $66 million. So risking 30,000 and made almost a little more than 66 million on the spread. Let's see. Almost says British pound. Oh, I missed it, but I did see that British pound yen. Let me go put that up there for you. They just erased it on you. You have to put it up there again on a different way. They, for some reason, YouTube knocked it off. Let's see if we can find that. Let's put that in there. I think we have that. Where's that at? That is, where's that? It's right there. There we go. British pound yen. I did see that. There it is right there. So we can do that. So almost try to get whatever you're writing again in there, but that's that's the way they do that sometimes. YouTube knocks stuff out. Now you can see here, been in a weekly buy for what's that? 2, 3, 4, 5 weeks now. We're on a 6th week. Now on the daily, I went into the sell there. Let's steal some of these. I'm going to steal some of these. Went into the daily buy right there on that spike. Didn't help out any. And then a weekly buy, and it turned into a loser. Doc has to be wrong once in a while, traders. And you can see here, I mean, you had a couple days to get out of it, but you weren't gonna, unless you were frustrated. Then it goes into the sell. You can't get short because we're in a weekly buy here, but you can't be long either. And then it's been in that since, right? No, okay, here we go. It went into the daily buy here, right there, and it made money just overnight, but it's went into the daily sell the next day anyway. So right there, and then that's where we're at now. We're back into the daily sell today. So that's where we are, and still holding on to that buy just by the hair of its chinny chin. Sorry, almost OLMOS. I don't know why they've hidden your question, but the message retracted. So let's see. JJ says some names very influential, like Druckenmiller. Yeah. Even yeah. I mean, what's his name? Paul Tudor Jones. Paul's influential when they say something, and what's the other one? The brothers Basque, the Bass Brothers from the Southwest, and the Maniac in Bridgewater in New Jersey here. What's his name? I can't think of his name. But yeah, I mean yeah, well look, look what it is. The media, if you watch Bloomberg or CNBC, you can't have these conversations on there. They won't allow it. I mean, you have one person will say something about it. All the talking heads smile, stare at you, say thank you, and they don't further the conversation like we just did, where I go in there and I show you the, what did I do? I started off with JJ. Started off with, what did you start off with, JJ? You started off with inflation and the Fed numbers. So I show you the, I show you the 30-year bond. I show you the stock indices, showing you how you're correct. Then I show you the grains, as you mentioned, the commodities. I show you the cascading effect in the bean oil and some of the other products. And then, oh, here you go. Almost got now GBP. Oh, sure, here, we'll get that one too before they steal it from you. This is British pound and the Swiss. And so you can't get a lot of honest, clean conversation without them trying to hide it. Them trying to, there it is right there. We have some people to ask about this once in a while. Now this, you can see we went into the weekly sell here. Daily sell, look at that. We'll move the daily sell. No one's looked at this in months. Went into the daily sell there. And then we went into the weekly sell that week. So that was pretty cool. Like that. And then, let's see. Did it go into the weekly buy right there? And no. I don't know. Let's see. We have to open this up and see. It's only running the 3. Okay, so this gas line 3.5, we're only running the 3. We're not running the 5. So it went into the weekly buy here. So let's put that in. No, you know what? Oh yes, it did. Okay, and then it goes into a weekly sell here. Then it goes into back into a weekly buy there. It don't know where it wants to go, does it? And then now, let's just double check this. Looks like it's in I'm going to put that there like that. Then it's right here. What is that? That's in a weekly buy still, right? So this one is the pink. Is that right? Yeah. And then it's back into the buy, and now it's flirting. Let's get rid of that. It's flirting with the weekly sell. Again, right here. There we are. Let's see. Let's make that like that. There we are. So that stayed in the weekly buy last week. There. Now on the daily. Let's see what it did on the daily. So it goes into the buy here. That's okay. But we're in a weekly sell, so you can't take it. Goes into the sell there. Wrong button. Right there. And we're in a sell, so you can be short here. So you catch this ride. I'm going to do it this way. Where's that? One of these buttons. Okay. So you can see here, catch that ride down. That's cool. So that's a winner, chicken dinner. Then we go into a buy here. We get the warning the day before too, don't we? Yeah, we have the red and the green right there. So you know that something's brewing, so you can start taking profits down in the lows here during that trading day. And then you go into the buy here, but you're not supposed to get long because again, it's in a weekly sell here. And then we go back into a daily sell there. So you didn't lose anything, thank goodness. And then it gives you a day and a half of profits, and then it throws back up into the buy again. Right there. And then it goes into the sell on this and takes you. Oh no, I see. Now we're in a weekly buy here. Okay, so then let's see. So it goes into the cell there, but you can't take the cell, right? So it's in the cell there, but you can't take it because we're in a weekly buy. So you don't get trapped on the move up either. So that's another thank you. And then we go into a daily buy here, and it barely makes any money, if any, right there. And then the next day, it gives you a warning that it's going down, and at the same time, what is it doing here? It's like setting up. It's probably underneath anyway, and it's in the cell, right? Like here, you can see that for the last 3 days. So you may have not even attempted to buy this. I would have been telling you don't buy it because you were underneath the weekly sell number at the time. So you may not have even lost any money there. And then it's a short there, and then it's a winner chicken dinner again, another win. But this is kind of choppy, but not bad. And then it goes into a buy with the weekly buy, and so then you make the money on that little move up in there. And then let's see, you get a sell there, but you can't. Let's see, red, and we got to fix that one too. And red. So you can't take the short. You can see it's in the buy here. So it goes up, so you can't take the short, and then you get the volatility signal right here. And then you can see it's starting to curve over again the following week. And there's the short there. But again, unless the weekly is dipped underneath, you can't. And you can see here it didn't. It may have put some pressure on there. At least you weren't long for that, so that's good. So you didn't lose any money out of that whole mess there. You know, you only made you made money from here to there. You didn't lose any money. You made money, but there are not a lot of trades in it, but enough to keep you safe. And then we are just flirting today with the daily buy right there. But now we're under in the weekly sell at the moment. Here, let's widen this for you, just to be able to see it a little bit better. There we go. There you go. How's that? OL, MOS, almost. We got that one through, and they didn't block you, so that's a good thing, you know. That is. All right, where are we at now? Where did we leave off? I think we looked at the euro, Turkish lira, and the dollar Turkish lira, so that's done. Okay, and they're going back in the weekly buys as we speak. Oh, Canadian. There's the Canadian. And again, perfect example of what JJ is talking about. Look at the way these currency pairs all are contracting. You know, they're consolidating. You know, exactly what JJ said at the very, very beginning. You know, well, he says at least for a while the Fed argument remains coherent. He's right. But at the same time, it's not what you would say unanimous. You know, it's the food inflation and so forth. He gave good examples there. And, you know, you can see in price action, we're not seeing anything, you know, what we're seeing is a stand and wait attitude on almost everything except for the NASDAQ 100, or what Dukascopy refers to and all of Europe refers to as the Tech 100, which is what we used to call the NASDAQ 100. And we don't call it the Tech 100 much anymore. We just call it the NQs. And so that's what that is there. Okay. Hey, this is pretty good, guys. You know, we've had some really deep, interesting thought here today. You know, I like that. You know, I like to kick ideas around. Remember, in the modern era, especially since QE, we are proactive traders nowadays. We are not reactive traders. Trading desks have been removed. Floor trading has been removed. You know, institutional trading has been relatively removed. There's still some. And what's left now is just hedge funds, pension funds, and mutual funds. So we are going through a very strange era where the quantitative easing has made the central banks the buyers of last resort now. So instead of like the specialists in New York and oh, what's that? Alan says California and Nevada in official drought. Yeah, I don't doubt that. I don't doubt that at all. Um, yeah, they're always, isn't California always in an official drought? It seems like it. So, we're proactive traders here now. We're not reactive traders. The action in the market, any reaction that we're seeing, buying and selling, a lot of it is instigated by central banks and the Federal Reserve. In other words, they decide that they want to support buying and selling, and then they lend money to the funds and banks for free. So they give them $500 million or $250 million or $1 billion. I mean, Citadel gets money from the Federal Reserve. Citibank gets money from the Federal Reserve. J.P. Morgan Chase gets money from the Federal Reserve. Goldman Sachs gets money from the Federal Reserve. Overnight money for free. They don't get charged for it. It's not like going to the credit window, like the old days when a bank or an institution went to the credit window to borrow overnight money. It was like as if you were you were public enemy number one. It was like you were the run of the litter. You were picked on by everybody. Now, they instead do that to instigate buying, proactive buying, instigate support to the marketplace. In other words, let's put it this way: if you get $500 million, your Citadel or your Bridgewater or Ray Dalio, was it Ray Dalio, the goofy guy up in Central Jersey? If you get like money from the central bank now, you go out and put on long synthetic positions. You go in there and you freeze the market up in a sense, in a positive way for the Federal Reserve. They just don't want to see major selling. That's all. Let's see. JJ says GBP pound or the cable trade is choppy, but it seems nice to trade intraday with volatility bands, for example. Yeah. I mean, they're good products. Look, I think without a doubt, the currency market is still one of the best markets to trade for intraday and daily and so forth. They are the cleanest, most give and take, not lopsided, back and fill, good old fashioned trading. I agree with you. Whereas the the rest of the markets can be a one-way street. They can, they buy and they buy again and they buy again and they buy again. It's like, my God, doesn't anybody know how to buy a pullback? Don't they let anything pull back anymore? Have you noticed that, JJ? Pullbacks in the currency markets are legit. They do pullbacks during the trading day. And in all the other products, it's like a freight train in one direction. They just refuse to give up. It won't stop. It's just like, whoever heard of buy high, buy higher, buy higher, higher, buy higher, higher, higher. I mean, that's all they do is, it's like, there's no pullbacks. There's no profit taking. You need the profit taking for pullbacks. And you see it in the currency markets, but you don't see it in the equity markets. They just don't let go. They just keep on buying like as if there's no tomorrow. And that's because the currency, the stock markets and so forth, are very thin. They've lost almost 75% of their volume going back to in the beginning of QE. So QE, when QE was created to help the banks and institutions for a year or two, or 3 years, have now turned into, they are now they are the norm now for 13 years. And so the pullbacks are very, we've only had a few good pullbacks overall, and it has taken world calamities to do it. I mean, like the COVID, what was it, the one before that? There was something else, I forget what it was, some panic and something, I forget what it was. But over the last couple of years, the pullbacks have been very thin. They're not consistent, especially during trading days. Forget about the pullbacks. Unless you're trading the currencies, pretty much the rest of the markets are not exactly ebb and flowing like they normally do for the last couple centuries. It's just all one direction. Profit taking, and it could be a combination of taxes and so forth that do that. But profit taking and everything else has been really squeezed. So yeah, JJ, you're right. Let's see. I'm using Bollinger Bands. That's cool. I used to work with John. I used to do the Guru review with John Bollinger back in the old days before there was Bollinger Bands, and he used to interview me every 2 weeks. I think it was. I was on his TV show, and the Bollinger Bands are a good tool. Matter of fact, I've incorporated them. That's what I've done is I've taken my math and combined them with the Bollinger Band what Bollinger Bands are a standard deviation, and so that's what my bands do with the Bollinger Bands. Let me try it again. That's what my time manifold is. I've learned that the time manifold is the Bollinger Band, and I do put Bollinger Bands on things. We were talking about cable, so let's take a look at cable. And I think, yeah, there we go. We've used cable before as an example. There are the Bollinger Bands right there. Okay, you can see them. And then you can see my time manifolds on a daily. So here is Bollinger Bands, the blue and the red, without a center line, right? And then look at my time manifolds. What it is, it's taking my math, and matter of fact, why don't we label this webinar in particular? It should be the JJ webinar, but we'll label this webinar Bollinger Bands and Doc's time manifolds. Now look at the two of them. Let's see. We're going to shrink this down for a second like this. We're just going to shrink the weekly down so we can emphasize the other two much clearer. Matter of fact, maybe we should make this a little bit darker too. Let's see if we can make this a little bit darker like that. Does that do it? I think it does, doesn't it? Does that make it a little bit more visual? And let's change that the same way, like that. There we are, for the rectangle. Now you see the Bollinger Bands here, okay? And then look at, you can see how Doc's, notice how my time manifold explodes right here. Let's put a big white line in here. What am I doing here? Like that. There we are. There we go. And where'd that go? It still didn't do it. All right, let's try it again. Oh, I see. I put it in the wrong spot. Okay, right there, like that. There we go. Okay, see the white dotted lines right there? See how the Bollinger Band is making its curve? My work made its curve because it's taking the standard deviation also. Okay? That's what GAS 3 is versus GAS line 3. So one is done with the lines, and the other is with the, we have a GAS 3 floating around here somewhere. And that's the exact same thing. Now, my example here really is check out the time manifold. Let's make it really thick. Matter of fact, what we could do is we could get funny and we could change it to the same color as the Bollinger Band. What's the other one? Red, right? Like that. Okay? So notice here, my time manifold breaks out right here, and I get a daily buy right there, right? So at that close, I know. Now the next day, if you're following Bollinger Bands, the Bollinger Band lifts up, whereas my math told you the day beforehand, right there. Now, look at the time, my time manifold lifts up with the Bollinger Band, but look how more powerful it is. It takes out this high here, it does, Bollinger Band does the same thing, but mine is exploding, compared to down in here. Whereas it takes a while for the Bollinger Band to explode. Mine has already exploded and is now trying to break off a little bit. See, it's it's starting to move back down and play, but it still stays above the zero line. And so it does it here too. It does it here. Let's see, let's move this white line over to there. You see here, it does the same thing again. Matter of fact, like right there, the explosion and the backing off, and then the Bollinger Band just kind of cruising along, but telling us that the explosion has already occurred. Whereas the Bollinger Band here is still kind of moving up, and you're thinking, okay, yeah, strength, and you see it chisel toothing its way. So how's that? That's pretty cool, huh? Yes. So that another good thing in in this webinar today is not only the fundamental conversation, but also at the same time looking at the standard deviation and John's work. So how's that? I think that's been a good day here. We've done some great exploration and some really good examples, and at the same time have had some really good points of view of being able to look at different concepts. So this has been a good webinar. I'm happy. You guys made me happy today. I'm happy. I'm always happy. But I mean, I'm really happy today. I'm really, really happy. All right. What else we got to say about this? We didn't really. Oh, how about this? Let's just show you some of the things that are going on since we're getting ready to run. For the ruble traders, let's show you where the ruble is at the moment. I'm going to save this. This is kind of fun. Save workspace. There we go. And then let's take a look at the ruble real quick with what's going on in Europe. It seems like it's firming up a little bit, but we've been in a weekly sell for weeks, and it's breaking down nicely. Let's take a look at the South African Rand, and we'll take a look at metals and oils really quick also, right there. That's been showing strength there, and we are seeing weakness the last couple of days in the gold and the silver, but mainly the gold. And I think silver today is doing it. Where are we? Gold and silver, no? Okay. Gold and silver, right there. We showed a daily sell. If you can see on the fact check spreadsheet, line 5. No, I guess not. Gold stayed in a buy right there. You can see it. 9 weeks in a buy, 6 days in a buy. Okay, and then you can see here in the gold chart. Now we are powering our way down today in a sell. Weekly is still holding on here. You can see that strength in there. And let's check out crude oil. There's crude oil. It's like up and away, my beautiful balloon. You know, it's been in a daily buy off and on now since May 24th. We got 1 day of a daily sell. It didn't survive. We were in a weekly buy anyway, so you couldn't take the short. So it was just like, be flat. Put you back into the long here a day later, and you can see here it went into the buy in the 70, and now we are, where are we at today? 71.75 is the high, trading at 71.49. So, all right, traders, that was a great day there. We will catch you all tomorrow, same time, same channel. The Singing Trader. Happy trails to you until we meet again. Happy trails to you, to all our cyber pit trading friends. Ta-ta for now, traders.